Hey, good morning, everyone. It's Louisa. It's Thursday, February the 12th, and we're here for another exciting day in the charts. So today we had unemployment at 8:30. We had unemployment claims at 8:30. Last month we had 232,000 unemployment claims. We're forecasted for 222,000, so a 10,000% decrease, or not percent, but 10,000 decrease, and today came in at 227, so slightly more unemployment claims that were forecasted for 222, and we came in at 227. For the rest of today, we have members speaking starting at 7 a.m. FOMC members beginning to speak at 7 a.m., 7:05 a.m. Eastern Standard Time. And this is all in ahead of tomorrow's CPI. We have, of course, CPI tomorrow month over month. And then we have, of course, CPI year over year, which is the more important number. So we have that at 8:30 tomorrow. Therefore, today is typically a non-trade day. Hi, Jamie. Good morning. I'm tape reading today as well, Jamie. Polterschneck, good morning. So it's a tape reading day. Just gonna go over what the charts did overnight, and we'll be able to clearly see that price pretty much came to a standstill overnight. Like you can just see the day before CPI that things just start to shut down. And but what I am and what I will be asking you guys is if anyone happened to watch Jadecap's video that I posted yesterday on his field swing high strategy. I find that quite interesting, and I'm watching it on the chart, and so I'm interested in watching it with you guys today. I'm not going to do anything with it, but I want to watch it with you guys for anyone who did watch that video, because I think it could be quite a good strategy, especially for those who are looking for something for scalping if you're doing prop firms, because it's such a simple strategy and it's a kind of an easy get in, get out. It's not complicated. So anyway, I'll be looking forward to your feedback if you watched the video and what your thoughts were on it. But for now, let's get started on taking a look at where the market is. I'm on the 4 hour currently, and we can see that the market is basically accumulating, and it's been accumulating for a while. So let me just highlight this area here, right here. I'm going to make this a different color, make it a bright yellow. So we can see that these are 4 hour candles. These are not daily candles, but we can see that price is, the high was uh, up here yesterday, and then we had this low that we put in down here yesterday. Well, down here, I'm not going to include this swing, um, but pretty much we are operating in this tight range. This is consolidation on the higher time frame. And when we get something like this, we know that smart money is engineering liquidity above and below this range. And so what we want to do is just be patient, and we will be looking for key signatures of what smart money wants to do. Is it going to take price up to the buy side, draw on liquidity up here? We have these areas, SIBIs, these areas here of liquidity, or does smart money want to take price down to the sell side where we have this drawn liquidity down here? We did come here on Thursday, was it Thursday? Yeah, Thursday, February the 5th, we had that low put in. So, but this is telling me that smart money is, we're waiting for CPI basically. So this is a day that typically I don't trade the day before CPI, but yeah. So this is what this indicates to me on the 4 hour. So technically, we're still on the buy side of the curve. This is the sell side here, and starting from here down to here is the sell side, and we're technically on the buy side, but price has kind of come to just a ranging motion. It could be, it could be just ranging before it takes its next step up towards the buy side. Anyway, we don't know. I don't know. I don't think anybody knows. But all we can do is wait and watch and look for signals and not get rushed into anything or forced into taking any positions that you may regret ahead of CPI. So let's go down to the 1 hour, and again, we can see we are very much in the accumulation stage. So we know that the way that price moves is AMD, accumulation, manipulation, distribution. So as price is engineering liquidity above and below this area, I will be looking tomorrow for manipulation, either to the upside or the downside, and then distribution. So again, I have no idea which way price will go. Don't think anybody knows, but like a good scientist, we're going to wait and watch and be patient. So that's where we are. Now let's take a look at specifically what happened in Asia and London overnight. Let me remove this box here. And I'm going to make this bigger so we can have a really nice look. I'm just going to slide this hourly BISI over so we get a really nice clear picture of what happened overnight. I'm going to make this really nice and big. And this is on the 15-minute time frame. And the reason I'm on the 15-minute time frame is these cycles. This is the first time frame that we can see the cycles. So this area here, this blue, they're all blue boxes, but this one here is Asia. And so Asia opened last night, it came down, and then it just had this motion from down here to up here. This is a trending. Asia is trending. Typically, I like to see Asia ranging. I prefer to see this kind of motion. This is what I want to see in Asia. I want to see Asia engineer liquidity, and then London can either take the high or the low. But last night we can see that Asia ranged. There was no trade for me last night in London. So then London opened up, and what did we see London do? Well, basically, London just ranged. And so we can see here, London ranged. And this morning, this next box here, this represents AM. Now we are in AM right now. And we can see that price came down. We took out London low. Let's just take a look here. Right here, we took out London low, and then price moved up. So this is a smart money reversal. And if we want to let's just take a closer look and see if we can identify all the characteristics of a smart money reversal. Let's go down to the 1 minute. Okay, so this is the area that we're looking at here. So we have London High, we came up in the AM, we took out London High. We have a smart money reversal up here. Price expanded down. We took out London Low, and we have a smart money reversal here. So let's look for the characteristics. So we have this down close green down close candle. Well, it's an up close candle, but it has the wick down, so that's the lowest point. And so we have a change in the state of delivery right here on the 1 minute. We have a change in the state of delivery right here. Why? Because this range of down close candles were responsible for pushing price higher. So this is our change in the state of delivery. We have an inverted fair value gap right here. That's in this leg down. We have an inverted fair value gap, so we want to see price get above this. And then we also want to see a fair value gap. Now again, I don't have a 15-second or 30-second time frame on TradingView. But just looking at this, very similar to what I said yesterday, I think there's a fair value gap in here. Why? Because I'm just looking at the wicks. Wicks are generally, you can think of wicks as gaps, right? Price moves very, very quickly and it will leave a fair value gap. So let's just say that this is a BISI. So we have change in the state of delivery, we have an inverted fair value gap, we have a BISI here. Do we have an SMT? No, we do not. In fact, my SMTs seem to be, let me just see where my SMT is. Yeah, seems to be okay. So there's no SMT, but I haven't checked ES. And so when price got above here, we had this wick here that just did kind of like this last touch and go before exploding up. And this would have been quite a nice trade. Again, this is a smart money reversal. Very clean, very clear. Stop loss would go below the low here. You could enter, I like to enter when we get above the change in the state of delivery. Price moved pretty quickly, so there's not too many opportunities to get in here. I would do this, and then I'll be watching closely here to see if price moves below or is supported. But anyway, we're coming into the open. I will be tape reading today, day before CPI. I'm not looking to take any trades, and but we can see that the day before CPI, we can see the effect on the market. We can see the effect on price. Again, we had Asia that trended, then we had London that just it just went flatline basically. It looks like it's dead. And then the two opportunities is we had this opportunity here in the AM when London High was taken. There's a smart money reversal here. The price came down. It took out London Low. There's a smart money reversal here. Price has come up into the AM. We've taken out AM1. And that's just kind of where we are here on the 1 minute. So I'm just going to move back onto the 5 minute because that's where I like to be. But that's kind of a recap of what happened overnight. And again, I just on the 4 hour, I just want to reiterate here that this red line is the 50% level. Below it, we are in discount, and above it, we are in premium. And where does that come from? That comes from this high to this low. This is the last range that we are dealing with. So if we take our fib and we take it from the high, we take it to the low, our 50%. Let's just see here. 1 second, I want to make sure we have the right range. 1 second, let's go to the daily. This is the range from the high to the low. So we'll take our fib, high to low, and our 50% is here. 50% of the range. So this is the premium, this is the discount. Let's go back to our 5-minute. This is the 50% of the range right here. So above here we have premium and here we have discount. Okay, so on the 5-minute, I'm just going to take these out. And I'm going to just move these candles over here on the daily. So we can notice on the daily here that in premium, if we look to the highs, we have a lot of wicks on the last 4 days, right? So 1, 2, 3, 4. And equally, we have a lot of wicks to the bottom. So again, we're in this range with wicks to the top and the bottom. So we just need to be aware of that. Okay, so price this morning has taken out Asia high. We've taken out London high. We've taken out London low, obviously. And Asia low is intact. So that's important to note. Previous day low is way down here. This is still in play, this SIBI. And this SIBI is still in play. And above us, we have year open. Previous day high is up here, which was yesterday. Yesterday morning, we made this high before this big reaction down. And then we notice that we had high resistance liquidity as price moved up. And we know this ICT, just a gentle reminder that when price moves either down really quickly or up really quickly, that when price begins to move in the opposite direction, it's high resistance liquidity. And we can see on the 5 minutes that you really had to have you had to give your stop some room, otherwise you'd be taken out, you know, by the pretty strong retracements or pullbacks, which is quite common in high resistance liquidity environments. So anyway, so that's where we are. It's 9:19, and yeah, so that's where we are. So what I did yesterday and this morning is on the daily time frame, or excuse me, on the 1-hour time frame. I went and I marked all the swing highs and swing lows from yesterday. A little bit hard to see, but swing high, swing lows down here, swing lows down here. This is a swing high here. And I'm just going to be watching this because I'm interested in Kyle's Jadecap's. This is one of his strategies. It's a very, very simple strategy. I linked it in yesterday's videos. I posted 2 videos yesterday. One was the live and one was just a recap of the trade. And I posted a link to that video in both of my videos. So you could just go and look it up there. And I think his video is about 15 minutes in length. So it's super, super, short. And he talks about the fail swing pattern. That's what he calls it. And so I found it quite interesting because as I've been looking at it over the past week, I see that it's quite effective. Now I haven't done back testing of 3 or 6 months. I'll leave that to you guys to do to determine whether you see any merit in it. But I'm quite interested, and I'll be looking at that today, so I might be pointing that out as we move through this morning. And like I say, the day before CPI, I expect some chop. I'm not expecting a lot from the market today, but yeah, I'm always Gonna keep an open mind. So anyway, cheers. It's Thursday, one more day, Friday, Friday the 13th tomorrow. Just kind of crazy. Here in Canada, we're always happy to be finished with January because January for us in Canada is like the hardest month to get through mentally because it's very, very cold. We get a ton of snow and it's the longest month in the year. It's 5 weeks, right? So for us in Canada, we come off kind of the excitement of Christmas and, a lot of socializing, that kind of thing. And then we go into we go into January and it's like a nosedive. It's like it's dark. It's like nobody wants to go out. Nobody has any money left over from Christmas, and it's just like so we're halfway through February, and that's a short month. And of course, we got the Olympics, and we have the world competitions, right, to qualify for Olympics. Anyway, it's February's kind of a nice time. So March for us here in Canada is equally, January, February, March is pretty bad. Like we're in the thick of it. So well, I can start to see the light at the end of the tunnel. We get through February, we'll get through March, and then we have April and May to kind of look forward to get a little bit more sunlight and yeah, look forward to the summer. So all right. So, how are you guys doing? What's up? How are you guys feeling about CPI tomorrow? Is anyone going to be using that strategy to pass accounts like with Apex or Top Step? Is anybody looking to do that? I am not, but I think a lot of people look forward to doing that. 9:24. Market's going to open shortly, so I'll just go down to the 5 minute for now. So again, on the 5 minute, we can really see right here, lots of accumulation. Here's our 50% premium and discount. So we're up here in premium. It'll be interesting to see tomorrow if CPI, pushes us higher, or if CPI causes price to move down. So this is the Asia low here. Let's see. So we have this BISI here. So price took out London low, came up, took out all of this, uh, and then is back in this BISI here. Hey, good morning, Sharka. Sharka is the day before CPI, so I'm just tape reading today. There's a lot of accumulation in the market. So for me today is just we're tape reading, we're just observing, and we'll be waiting to look for something tomorrow. So I just want to set that standard. So this swing high here, I'm just talking out loud. So this is on the hourly. I marked out the swing highs and the swing lows as per Kyle's video that I posted yesterday for those interested. And so anyway, so this is a swing high. So we have a one candle, two candle, three candle. Price closed back inside the range. And so based on Kyle's strategy, you could have taken this trade and just taken three candles down. So this is what I'm going to be talking through today. Always happy to learn. Always happy to learn with you guys. So this busy here is not holding. So we see price moving through it. This is where the London movement initiated from. So I'm just going to put a busy here. So it might come as low as here and then move back up. But it came through the first busy. So that, that's a sign of weakness when it goes through two busies. But let's see what happens. And we've got Asia low down here, which price has not, that level is intact. And that is a swing low as well. So if we follow Kyle's strategy of swing low, so we have this swing low here. So we have one candle, two candle, three candle. So this is the swing low. And then we wait for the next candle to open back in the range, which we had a little bit of chatter in here, but eventually it did. So if your stop loss was below here and you were looking for a long, as Kyle says, just stay in for 2 or 3 candles on the hourly, and this would have worked out nicely too. That's why I wanted to share with you his strategy, because it's so simple. And it seems to be, from what I can see, seems to be quite effective. Now, just because candle closes back into the range doesn't mean you just blindly take the trade. You need to move down to the smaller time frame, and you need to look for an entry model that works. So, Sharka. So I'm just looking here. London had, in the AM session, this swing low here at 8:15. It took out the London low. We had a smart money reversal, and price pushed up, took out all of this liquidity up here, and just waiting to, just observing to see. So price has just opened. So we've come right down. Let's open up ES and follow what's happening over here. So this candle came down. We took out this London low. Kind of interesting. So we took out this London low. Now here's midnight. So midnight's important. So we want to sell above midnight, as high above midnight as possible. And we want to buy below midnight. But we're hovering around midnight. See how we hovered around midnight? Pretty much all night. This is accumulation. And here's our 6 a.m. 4-hour candle. So here's our open of this candle. So open high. We might get a low and then a close. We don't know yet. It's too early to tell. So let's just see if we have an SMT here. So we do have an SMT. NQ took out this this low from 8:15, but ES did not take out that low, causing an SMT. Again, an SMT in and of itself means nothing. It's just a confluence to be used. So price came down, wicked this out, Here's our midnight. Here is our 50% of the range. So we are in premium. So when we are in premium, I don't really want to take a long. I would rather see price come back into discount. If I'm interested in taking a long, I want to see price come back into discount before taking a long. So that's where my head is. That's where my mind is. But today I'm not interested in taking a trade because it's day before CPI. So today is just a day to look at the chart, get familiar with what's happening, really see what's happening, and making plans for later today. I do have plans for later today. I was out with my dog super early this morning. It was dark, and we always like to go for like a super long walk on the trails, and I always grab a coffee first, and then that helps to keep me warm in this weather. It's brilliantly cold this morning. I think it's probably around -15, -17 or so. That is cold, I'll tell you. The wind chill. So getting a lot of jumpy. Day like today is really good practice for just taking your hand off the mouse, just relaxing, just like being the observer and just really seeing what's happening without any emotion, without any, excitement. Yeah, Sharka, it's cool. Have you had a cold winter, Sharka? I mean, you're south of me, but you guys can have some pretty good winters down there. We've had a really hard winter here this year, like -28, multiple days. That's why all my heating pipes froze and then exploded. Anyway, so again, we took out this low. Got these two bissies here. We've got this high, but if you're thinking of going long, like I'm not saying you should. This is for entertainment purposes only. There's so much risk in trading, and I don't encourage anyone to trade. Okay, yes, yeah, you can have some pretty tough winters there too, Sharka. Yeah, for sure. So, if this were setting up to be a smart money reversal, then I would want to see a change in the state of delivery, which would be like if this were the low here, change in the state of delivery was here to go up. There's nowhere on the 5 minutes, but there's no inverted fair value gaps. So I don't really like that. I mean, if I move down to the 1 minute, let's move down to the 1 minute. We'll take a look. Let's just take this out for now. So we've got SMT down here. We got SMT down here. We've got a lot of choppiness here. What a difference it makes going from the 1 minute to the 5 minute. That's why I like to watch price on the 5 minute because you're a lot calmer. Your mind is pretty calm when you're on the 5 minute as compared to the 1 minute. The 1 minute can be moving so quickly that sometimes, um, it's a little more challenging. But we've got SMTs on both sides, so that's a no bueno. And here's our midnight. We're still so close to midnight. I want to be entering a trade when we're far away from midnight. I want to be like way up here to take a short, where I want to be way down here to take a long. I don't want to be close to midnight because midnight is opening price. And if we look at the 6 a.m. candle, we basically have a doji candle. So here's the 4-hour candle. Here was our opening price, right? This black line is our opening price. And so we had open, low, high, and then, we don't have a close because obviously this candle isn't going to close until 10 a.m. But it'll be interesting to see what the 10 a.m. candle does. Yeah, 1 minute is pretty noisy. If there's going to be a good run, you can get a good entry on the 5 minute. You don't need to be on the 1 minute. Like you can see very clearly a nice entry on the 5 minute. You only need to get part of the run. You don't need to get the whole run. And on the 5 minute, the entry, if the run is going to be a good run, my mouse I think is dying here. The 5 minute entry it can be really nice. I like to watch on the 1 minute just in the mornings because I want to see the first presented fair value gap. Well, I think my mouse is pretty much dead here. It's okay, I have my laptop mouse, so that's fine. Again, here's the Asia low, right? So curious to see if price makes a run for Asia low. So we can see this SMT, right? Because NQ, we took out this low right here, but ES did not take out this low. So that's where the SMT comes from. Again, this 6 a.m. 4-hour candle, it made this super high, it made this super low, now it's right back at equilibrium. But this is day before CPI, kind of movement. Lots and lots of wicks, both to the upside and to the downside. So we've got a first presented fair value gap on ES. We still don't have one on NQ. So just a lot of churning. Okay, well, that mouse is officially dead. I think it needs some new batteries. Anyway, I got my laptop here, so no worries. So we see a push up on ES. And it took out the previous high. NQ has not taken out the previous high, so we have an SMT below us and we have an SMT above us. And that is a no bueno in terms of a smart money reversal. That's what we don't want to see. We don't want to see an SMT on both sides. If we look on the daily here, look at the wicks, on the past 4 days. Lots of wick action up here. Let's just jump to the hourly for a second. Lots of wickiness. Up. Here's our previous day high. I don't know, maybe we'll take our previous day high. Here's that swing high. So I'm just reverting now to what Kyle, okay, if you guys watched Kyle's video yesterday about failed swing highs. So here's the swing high from yesterday on the hourly, and we've just, actually we have a swing high up here as well. But anyway, we took out this swing high here. And we would want to wait for this candle to close. This is on the hourly though, and it's not going to close for another 15 minutes, but I'm just pointing that out. I'm going to go back to the 1 minute. Yep, well, it looks like a big pile of mess. Just thinking here. See, on a day like today, smart money's not going to get involved until CPI is released. Just would like to see if Asia low will be taken out. And the macro starts in about 1 minute. These BISIs did not hold on this upward movement. So these become inverted fair value gaps. Here is our red line that defines a discount from premium. So above here is premium and below here is discount. We still, on the 1 minute, we don't have a first presented fair value gap yet, do we? Yeah, Sharka, I mean, this is, this is price action that I like to be on the sidelines of this, although it was pretty wicky yesterday when we took the short. But okay, so let's see if it comes down, if it wants to take out Asia, or the week open is even below that. Below midnight. Oh my gosh, look at this 6 a.m. candle here is crazy. Or this is the daily candle, but this is the 6 a.m. candle. Open, high, low, close. This here, not quite an immediate rebalance, almost. Not quite. I'm looking at the wick of this candle and the up wick of this candle. What I notice about this kind of price action is that we don't have really nice, solid, long, strong candles. You know, we don't have limousines. We have limousines here, but here the candles are very tiny and bitty and, you know, choppy. When price wants to move somewhere, we want to see these, you know, these big, strong candles. And let's see if we're going to take out. We also have a swing low down here. This, again, I'm just talking about Kyle's. And we have a swing low down here on the hourly. Again, these are in reference to Kyle's strategy. Now this morning, I'm only going to be here for the first macro. Again, this is a day that I don't trade, but I just wanted to kind of like roll the morning out with you guys, review what happened overnight. But you know, I like to make plans on days like this, and you know, trading's an important part of my life, but it's not my whole life. And so I like to, on days like this, I want to be off the charts and I want to be doing other things so that I'm fresh and ready for tomorrow. I think this week, I haven't taken a loss this week. I took one break even, and I think I have just over 600 points out of the market. So I'm very happy with this week. And you know, you want to wait for those great days to trade, and you want to wait for those great setups. We've got previous day low down here. Hi, Stephen. Good morning. Stephen, you raise an interesting point. I think what I want to do is I want to create a very small boutique mentorship program. And uh, I particularly enjoy working with people who really are focused. You know, like they have a focus, they know what they want to achieve. And I enjoy working with that kind of mindset. So I'm not there yet. I don't have anything like set up, but I'm thinking that this is going to be the year, probably in the third and fourth quarter, that I will put together a boutique mentorship. And I like working with small groups and getting some results. That's what I like to work. That's the kind of environment that I like to work in. So anyway, I'm going to throw that out there. And I just need to figure out what that looks like. And I'm cautious. I want to make sure that, that I have something put together that's of real value. So anyway, it's on the planning list, Stephen. Um, but I don't like doing anything half-assed. If I'm going to do it, then I'm going to have something that's of real quality, because that's how I like to work. I like to work quality. I don't want to waste anybody's time, and I think there's there's a lot of grifting that goes on in the trading environment, and I just think it really, really hurts people, and I'm not about that. So, okay, so we're just choppy, choppy, choppy. We're coming down to Asia here, the swing lows. I don't know if we're going to make it down to previous day low, but I'd like to see Asia low being taken out. Here's Asia low down here, this blue line here. So this is Asia low. I'd like to see Asia low taken out. But again, if we go back to even the 5 minute, see, this is accumulation here. We're accumulating. We had a little manipulation here. We had a little manipulation here. But let's see if we can take out Asia. And then I'm curious to see the 10 a.m. candle when that opens. See if we can stay above the weekly open, or if we just drop right down to the previous day low. Again, thinking, there's not much smart money involved in the day before CPI, right? Smart money is just, it's holding its gunpowder for tomorrow. But tonight, as we look at our charts and we think about, okay, what do we think smart money is going to want to do tomorrow, right? It's either going to take price super, super high, manipulate, and then drop it like a hot rocket, or it's going to set up a draw lower, manipulate, and set up for a run higher, maybe back to the all-time highs, something like that. So that's what we want to focus on tonight as we sit and we look at our charts, and we want to put ourselves in the shoes of smart money. What are the opportunities for smart money tomorrow when CPI is dropped? So today is just a day to practice some of our skills. One thing that I did want to mention today is I have a lot of traders who are very fixated on what the trend is. Are we bullish or are we bearish? And to me, that's a very ambiguous question. And rather than thinking in terms of are we bearish or are we bullish, I like to think in terms of if this, then this. So when we come to the charts on a daily basis, rather than saying I'm bullish and then being in that mindset that you can't see what's really in front of you, because now you're looking at the chart with rose-colored glasses, because in your mind you believe that we're bullish and therefore price should go higher. And then if price drops, you're caught unaware and you're like, wow, I never saw that coming. Like, it used to happen to me a lot, right? So I like to think of, I'm going to write this out. Instead of thinking of are we bearish or bullish, think of looking at the market in terms like this. If this, then this. If this, then this. So this is how I look at the market now. So if price comes to previous day low and shows weakness, then I anticipate price moving to, you know, maybe I put in this actual number 24,960 because that would be the next swing low. If price if price comes to previous day low, rejects with a smart money reversal, then I anticipate price running for previous day high. So in this way, we're not in our minds creating a bias that we need to be married to, that we need to be stuck on. Because when you're stuck on a bias, you're not seeing what's really in front of you. So I like to use these if this, then this statements. And these are statements that we always use in like computer science. If you study computer science, if you're programming, if this, then this, right? That's how we program. If this, then this. These are the rules. And since I shifted my thinking to if this, then this, I am less I'm less likely to be so focused on bullish or bearish, which really means nothing because people often don't even talk about like what time frame. Market could be bullish on the monthly, but this morning, we could be bearish on the hourly or the 4 hour, right? So you have to be very, very specific. If you're going to be bullish or if you think you're bullish, then you need to be precise about what time frames you're talking about. If you talk to a scalper, they might be bearish in the morning and you are bullish on the weekly and the monthly. So when I shifted to the if this then this really helped me to see the market, see what it's showing me without me inflicting on myself bias, which clouds my judgment. So I'm just going to throw that out there. But this, if this, then this. So anyway, give that some thought if that's something that when you think about this and maybe you try using it, if that also helps to shift you out of looking at a situation through rose-colored glasses. So here, where are we here? Here's our Asia. Here's our Asia low. Here's our swing low. So let's see if there's a reaction here. So if we come down to Asia low, if price is showing weakness, we may continue coming down to the previous day low here. If price comes below Asia and shows characteristics of a smart money reversal, then we may anticipate price coming back up to sweep this AM high or previous day high. That's how I'm thinking here. Okay, so we've taken out the Asia low. There was also a swing low from yesterday morning. We have a swing low down here from yesterday as well. We've got our 10 a.m. candle now that's open. So let's take a look and see what our 10 a.m. candle. We can see that, so here's the open. Here's the black line from the open of the 4-hour candle. So we have open. If we expect price to continue moving down, then we would want open, high, low, close. And we can see here that we have a very tiny wick. So that could be the open high. It's very, very small. But here we go. It could be open low, high close. We don't know yet. Let's just move down to a smaller time frame and see if we have a smart money reversal in play. So we've taken out Asia. This is very messy momentum downwards. Like, look at this, right? There's very few fair value gaps. There's a lot of retracements. Like, this is extremely, extremely ugly and messy. If there's going to be a smart money reversal, we will need to see a change in the state of delivery, and that would be right here. So let's just hypothetically put that on our chart. We would want to see an inverted fair value gap. We have one here. We'd want to get above that. We would want to see, we would want to have, we need a change in the state of delivery before SMT. So I don't even look for an SMT before having a change in the state of delivery. Price could be simply retracing back into this SIBI before moving lower. Again, looking at this 4-hour candle, here's our open, low. See if we get above change in the state of delivery and above this SIBI. Do we have a breaker? Low, high, lower, low. We'd want to get, again, to get a breaker, we'd need to be above this high. So a lot would need to happen before we even think about a change in the state of delivery or smart money reversal. But again, day before CPI, we have a lot of, it's the washing machine. It's a washing machine effect. What's really nice, I know I've said this, but I'm going to repeat it in case there's anyone new here. But what I really love about the 4-hour candles is that it also shows by these red lines when liquidity is swept. And it's just a really nice visual, you know. So we've swept liquidity to the upside on the 6 a.m. candle. And that's why it kind of makes sense that price would want to come down and sweep down here, because we've already swept up here early this morning, right? That's already been done. So you can check that off the box. So anticipation would be if we have swept the high early this morning, then it would make sense that price would want to expand lower and sweep the lows. See how, again, I'm using the if this then this, and I'm not coming to the charts with you guys saying I'm bearish this morning or I'm bullish. If this, then this. It's like when you have kids, right? If you wash your hands before dinner and you eat your dinner, then you get a cookie. It's very clear with kids what the direction is, right? Rather than saying to a child, if you're good, you can have a cookie. Because what does good really mean? It's so ambiguous, isn't it? Kids don't understand that. They're like, okay, well, what does good really mean? You don't want kids to think, oh, I'm not getting a cookie, therefore I must be bad. No. If you wash your hands and eat your dinner, then you get a cookie. It's very clear. So if we have price come back into, we came up, we came back into this SIBI. I'm going to just switch this back to a SIBI because it looks as though price may want to move lower. So this could be an entry to move lower, but it's uncertain at this point yet. Look at our 4-hour candle. When we have a 4-hour candle that opens and appears to be in a doji type formation, this is a move to the sidelines and wait for further information, because the 4-hour candle, when the market is moving in a healthy, straightforward manner, it very clearly gives us an open low high close or an open low high close. But when it gives us a doji where we have a wick on either side, this is indecision in the market. These are buyers and sellers who, for the time being, are agreeing on price, and neither the buyers nor the sellers are pushing the price in either direction. So let's take a look at the indices and see what's happening with these guys. So let's look on I like to look on the hourly of the indices. I have NASDAQ in the middle, ES on the left, and YM on the right. So we do have a crack in correlation. We have YM really being ambiguous, and we have a crack in correlation for ES and NQ. So we have NQ that took out this low and ES did not. So that is a crack in correlation. And then YM over here is it's just showing ambiguity at this point. Again, the 4-hour candle, a wick to the top, a wick to the bottom is quite indecisive. It would make sense for me for price to come lower because we've already swept up here. Oh my God, just looking at that 6 a.m. candle, we've already swept the highs. So this could be, potential entry for just a very quick short to the downside, maybe to previous day low, potentially. But again, I don't trade the day before CPI. I'm talking out loud here. And this is for entertainment purposes only. I don't give advice on trading. I'm an ICT student, and trading is risky, and so I don't encourage anyone to trade. Just putting it out there. So on ES hasn't even taken out Asia low. See, right here, Asia has not taken out, or ES has not taken out Asia, and on NQ we have taken out Asia. That's why we have this SMT. So it'll be interesting to see if ES wants to catch up and take out Asia, but it doesn't have to. We could have a smart money reversal, and that's what the SMT would be here because NQ has taken out Asia, but ES does not have to. So we have a low, high, lower low. It's a breaker to the downside. Again, just looking at that 4-hour candle, that's a no bueno right now. That is doji, that means nothing. Again, not surprising for the day before CPI. Now, hypothetically speaking, let's say that tomorrow was not CPI. In a situation like this, I would not engage with this and I would wait for the second macro to open for further information. I would be waiting for further information because right now it's 10:11. That first macro closes at 10:15. And it could be that manipulation is moved one time cycle over. So we might see, rather than seeing that manipulation in the early AM session, we may have manipulation shift just one cycle over, and we may have a clearer picture in the second macro. That's what I would do if tomorrow were not CPI. Just this is a wait and see and assess, and possibly wait for more clarification. Again, that 4-hour candle showing us ambiguity. So I'm just going to point this out. So this change in the state of delivery would be changed now. So I'm going to move this out of the way. Always when there's a smart money reversal, there's this chop fest that happens, right? So we have this low, then we made a high, then price came back into this SIBI, took out this low, is back into the range. Like this is very common for a smart money reversal. And so therefore the change in the state of delivery now, because this is the low here, this candle made the low, our change in the state of delivery would be, sorry, I'm using my Mac keypad because my mouse needs new batteries or something. Just a second here. So here is the change in the state of delivery now. And let's look for inverted fair value gap here. So change in the state of delivery. Here's our inverted fair value gap. And then our regular fair value gap is here. But this is a SIBI, so I don't really like that so much. Let's just leave that for now. So if price can get above this SIBI and above this change in the state of delivery, the SMT, we do have an SMT, but the it's 1014, and so therefore the first 9:45 to 10:15 macro is coming to an end. And when that happens, we can get price distortion. So again, I would wait until the next macro. That's what I would do. Again, I'm not taking a trade today, so, but I'm sharing what I'm seeing here. This is what I'm looking at. If price gets above inverted fair value gap and shows some strength, and if it remains above change in the state of delivery, and we have an SMT in place, then I may take a very short long. Again, I'm not doing it. I'm using my if-then statements as an example to show you guys. See how it's hesitating getting above that change in the state of delivery, right? It gets up there, then we've got a wick. It's showing weakness. We don't want to see that. If price is going to move higher, we want to see strength. We want to see that smart money has an objective. We want to anticipate where that objective is. Right now, this is ambiguity. And this is the type of environment where a market's going to just take your money. Okay, so we have a nice strong candle to the upside, or a wick on the green candle. But again, that macro has finished, so we'll just let price distort around, and then I would be back like looking at 10:45 to see if this were a regular trading day. I would be waiting for 10:45 to see if the market is going to show me greater purpose. Oh, thanks, Poltersh. Poltersh. I can't help but smile every time I say that. Your handle. I just think that's so funny. Um, yeah, there are just great days to trade when the market is very purposeful and where it wants to go. And those are the days that you want to wait for. Those are the days that make trading so much fun because you recognize the confluences. There's purpose and drive in where smart money wants to take price. And when you align yourself with their purpose and their commitment to getting somewhere, I mean, it's like being on like a roller coaster, right? Like, but a fun roller coaster. You're attaching yourself to their purpose driven direction. And there's nothing funner, that's like being on the Autobahn in a convertible. Not that I've done that. I haven't done that, but I want to. Again, you see how price did not stay above change in the state of delivery? It is price distortion right now. That's what it's called. It's called price distortion. And this often happens in between macros. It's very price distortion. It can be very it can really, this kind of excitement when traders think, oh, I see a smart money reversal coming, I'm going to get in now so I can get in at the beginning of the move kind of thing. It can really kind of suck you right in, right? But I have found that crazy things can happen between macros. Like you think price is going one way, and then that next macro starts, and uh, price has a different direction in mind. So I have been lulled into um, thinking, oh, I see a smart money reversal coming to the upside. Why not just get in before the macro? And then, I've had the rug pulled out from under me. So now I'm super patient. I'm like, no, we're in price distortion right now. I will wait for the next macro to open to confirm. Are you talking about this this Sibby here, the pink one, the purpley pink one? Yeah, absolutely. Like we had a down movement. We've come back up into this, right? We've moved down. Now the thing is we've stayed inside it, which is kind of, which is good. But like ICT says, a nice, really strong down movement. He doesn't want to see price come above the consequent encroachment. Like he just wants to see it kind of tap it and then move down. But yeah, you're absolutely right. Right now, it can go either way. It could use this, right, as the jumping off point to move lower, or we have the beginnings of a smart money reversal if it can get above change in the state of delivery and above this pinky purple. So again, look at the 4-hour candle right now. Buyers and sellers are agreed on price. No one is running with this right now. So either we get above the change in the state of delivery and the inverted fair value gap, or we get below this swing low, right? Put in another SIBI, and then we'd want to think about, where does price want to go? Does it want to go down to previous day low? It might. We also have a swing low here, but let's go on to the 5 minutes so we get a better view of things. It's always better to be on that higher time frame. So we've taken out this, and here is the next swing point. And then below that is, where did this SIBI begin? This SIBI is in here. So we have liquidity in here, and then below that is the previous day low. So that's what we're looking at. So if in the next macro price rejects from here and continues lower, we're looking at the week open, the swing low here, we've got this SIBI, and then the previous day low. That's what we're looking at. If price gets below that. And that would make more sense to me because we already swept the highs this morning, right? Like in London here, London, these three 90-minute cycles and this AM, um, price was engineering liquidity above and below. That's what happens when we accumulate, right? Price is accumulating liquidity above and below. Then here was the manipulation and then this downward momentum. The question is, are we finished with that because we took out Asia low, or are we going to continue lower? And right now, we need more information. Oh, good for you, Sharka. Good for you. See, price comes up, immediately rejects this change in the state of delivery, comes back down. But we can say that price is respecting the SIBI, which would support the thesis that price could move down again. Waiting for 1045 is the wise decision here. Anyway, I hope this has been helpful, guys. I said I was only going to stay on for the first macro because, it's a day that is just, I'm not interested in being on the chart and wasting my mental capital. I'm excited about tomorrow, CPI day, and I'll be looking at the chart tonight, looking at it from an anticipatory point of view in terms of where will smart money want to take price? Is it going to take it nice and low for us so that it can take all the sell side stops and then take price higher? Or will it take us to some previous highs, set up traders for thinking that price is going to go higher and then drop price? So that's what we all need to be thinking. And when you look at your chart tonight, use this, if this, then this. And then you're not going to get stuck in looking at the chart or the market with rose colored glasses and becoming married to some bias of going higher or lower. So hopefully that shift in thinking helps to set up your eyes on the market tonight in anticipation of tomorrow. And tomorrow, I think CPI is 8:30. So I think I'll just do the same. I'm going to open up the live at 9 a.m., but I'll be watching the reaction at 8:30. I don't take a trade on CPI morning before market open. And even then, oftentimes I'll wait until the second macro. So okay, guys, so go and do something fun today and forget about the charts. Save your mental capital for tomorrow. And I think next week we're going to have a good week. The next 2 weeks will be good weeks of trading. We've been through non-farm payroll. We get CPI out of the way, and then we can just kind of settle into, hopefully some healthy market trading. That's basically it. So, and if you haven't watched Kyle's video that I posted on the 2 videos that I posted, if you look for Jadecap, or Kyle is his real name, the video that he posted on failure swing patterns, it's very interesting, especially for anyone doing prop firms. And the reason I really like that strategy is you can use it in no matter what the market is. So whether it's choppy or trending, you can use that strategy. If you use it for evals, the drawdown is like nothing. Like it's honestly, it's nothing. The trade either works or it doesn't. And so you're not sitting in a trade that you're going to have drawdown in. So I really like that for prop firms. And I think that the video is 14 minutes long, but it's really interesting. And anyway, I'd like to get your feedback on it for anyone who has time to watch it. And we can revisit that over the next few days and into next week. I'm not surprised, Sharka. You're a busy mummy. Okay, everyone. Thanks for joining me this morning and hope some of this was helpful. And I'll see you guys tomorrow. Okay, bye for now.